Hello, it is the 23rd of March 2011. Welcome to today's Silver Log and the Silver Analysis. Let's start off with the daily chart. And this trend line that was previously taken out looks to be recaptured, thus setting up yet another bear trap. Because whenever you break a trend line, it is either going to be a reversal, and well, resistance really wasn't found here, and a reversal will be a break of this 34 going lower. That did not happen. Maybe we correct through time, or we change the ascent that it gains. Instead of a trend line of this magnitude, maybe it's one of something of that angle. But considering it's back above it, no, that didn't happen either. So it's a break below and back above it that oftentimes can create a failed move to a fast move. The next one really would be up towards the 38, and then the next primary target is between the 38 to 42. Before we get there, 37, 34 I think is the next intermediate term resistance. But for now, the daily chart looking very, very strong. The corrections within here have been really short for the most part. This is the biggest, longest correction we've had since the market bottomed in February. So overall, that is very strong for the market, and we'll move on now to the shorter term time frame. The blue line represents the 1-day moving average, and the orange line the 5-day moving average. And it's been holding this 1-day average very well with support in here, support for a while, support, and then the resistance level here at 3650 was used as support for this current liftoff right now within the market. If we take a look at the same chart, just to extend the periods out a little bit, there's this blue line, and I want to go over what this is. And what this is a volatility measure. Very simple calculation, really, as all I do is take the difference on each one of these candles, the hourly candles, from the highest point to the lowest point, and then take the average of the last 30 and 120 days, put them together. This is what this tells us. What it's saying is that it's not that volatile. And normally, when markets go higher, you would expect less volatility than you would when markets proceed towards the downside. But for now, we're having rally on low volatility. Finally, I made this chart up on the 13th of December. And that's within this trend line that I was following. And well, at this time, it was following it tremendously. But since this time frame has come into play, let me just match this up. This is what we're looking at. Now, I know you can draw a line in here, but it's not needed. It never was resistance, and it's a decent way above or below this line, excuse me. And what we see in here is that we've had a nice little corrective situation, and it's now looking to break out of this rally. Now, just imagine if, say, the market would have transpired just a little bit differently. Let's assume that maybe we had some nice little rallies in here, and then we had this movement, something like the area of this. What will we be saying? Will we be saying that we had our correction and now we're stabilizing at this trend line? And it looks like because we've been holding it for a while, it could have a good chance of going higher. And let's just assume that maybe we would have had some heavier selling within this market. Let me just do a little quick example in here. And let's just say this is where we are. What would we be saying about this? Well, we'd be saying that the moving averages would be rolling over. We'd be showing a breakout pattern. But instead, where we are today is somewhere along the area of in here. I think at some point I'd like to see a test towards this trend line, and I think there'd be significant resistance if it were to manage to get close to the level. But for now, let's look at it 1 day at a time. We're making a nice bullish trend, and thank you for watching. Bye-bye.